Oh, look, it's 2 a.m. in the morning. Again. You're sitting in the glow of 3 screens, your coffee's cold, and you just watched a 15% gain on some dog-themed AI quantum token evaporate because a whale with a brain cell decided to sell. You feel that? That sinking feeling in your gut? That's not just disappointment. That's the product working as designed. You're not a trader. You're a lab rat pushing a lever, hoping for a pellet that stopped coming 6 months ago. And you're paying for the privilege. My name is Sam, and today we're dissecting the fantasy you call an investment strategy. We're going to talk about the true cost of chasing 10x, 100x, whatever the hell x gains in crypto. And it's not just the money you lose on a bad trade. That's the obvious part, and you're still bad at avoiding it. The real cost is a silent, compounding tax on your finances, your brain, and your life that makes getting rich slowly look like a goddamn superpower. So put down your phone, stop looking at the chart for 5 minutes, and listen, this is going to sting. Let's start with the foundation of your misery, the lottery ticket mindset. You think you're playing a high-stakes investment game? You're not. You're buying a scratch-off in a casino where the house owns the ticket printer, the scratcher, and takes a cut every time you breathe. You're focused on the one ticket that might hit, blind to the mountain of losing tickets piling up at your feet. And the worst part? The house edge isn't hidden. It's in plain sight, and you volunteer for it every single time. Here's what nobody tells you about those micro-cap gems you love so much. A 2023 look at over 12,000 DeFi tokens launched on decentralized exchanges found that more than 70% were either abandoned or had their liquidity pulled within a month. 70%! That's not a market. That's a landfill with a ticker symbol. You're not picking diamonds from the rough. You're digging through garbage hoping to find a diamond that someone else didn't already fake and sell you. But okay, let's say you're a genius. You're the one who finds the real project before the pump. Great. Now let's talk about the guaranteed losses you incur just for playing. Let me be clear about something. This isn't about risk. This is about a time's misunderstanding of cost. You look at a trade and think, I could 10x. What you don't see is the 4, 5, 6 little bites taken out of your stack before the race even starts. Network fees, deck swap fees, CEX trading fees, slippage. That's the house, Vig. And it never sleeps. Let's actually do the math on this, since you clearly haven't. Picture a portfolio. Let's say you start with $10,000. You're an active chaser, so you make, let's be conservative, 3 high-conviction trades a week. Average trade size, $3,000. On a centralized exchange, the fee might be 0.2%. On a volatile, low-cap altcoin, the slippage, the difference between the price you see and the price you get, is easily another 0.5%. That's a 0.7% cost to just enter and exit per trade. So $3,000 times 0.7% is 21 bucks. Cool. Seems small. Now do that 3 times a week. That's $63. In a month, that's $252. In a year, that's $3,024. Poof, gone. To break even on times, just the fees and slippage, your $10,000 portfolio needs to grow by over 30% before you see a single dime of actual profit. And that's assuming you never make a single losing trade. You're running a marathon with a backpack full of bricks and wondering why you're tired. But here's where it gets interesting. You're not just losing the fees. You're systematically missing the gains happening right next to you. The gains you think are too slow, too boring for your big brain. This is the staggering opportunity cost of the big play, and it's the financial ghost that will haunt you. Think of your capital like water. Water you put in a moonshot bucket is water your times, not times, pouring into a bucket that has a proven, boring drip feed growing it steadily. The cost isn't just loss. It's forfeited gain. It's the road not taken, except the road is paved with compound interest, and your road is a dirt path that leads off a cliff. Let me show you the math that destroys your ego. Let's talk probability and expected value. You love the story of the 100x moonshot. Great! Let's build a realistic moonshot portfolio. You pick 10 microcaps because you're diversified or whatever. Based on the data we just saw, let's assume a likely outcome. 7 will go to 0, rug pull, abandoned, whatever. 2 will slowly bleed out, losing about 80% of their value. 1, if you're lucky, will actually do a 20x. You put $1,000 into each. 10 grand total. Let's do the autopsy. The 7 zeros give you back nothing. The 2 bleeders give you back $400 each. The 1 winner gives you $20,000. Add it up. You've turned $10,000 into $22,000 over, say, 2 years. That's a 2.2x return. Annualized, that's about a 48% return per year. Sounds amazing, right? You're a genius. Now, let me ruin your day. Bitcoin's annualized return over the last 5 years is about 40%. You took on catastrophic, sweat-dripping down your back risk. You picked 10 coins hoping one would hit, and your brilliant strategy outperformed just buying and holding Bitcoin by 8% per year. Maybe, if you picked right. And that's before we deduct the 3 grand in fees you almost certainly paid making all those trades. Suddenly, your 48% looks a lot like 18%. You took a bazooka to a knife fight and somehow managed to shoot your own foot off. The boring, slow path of just buying the blue chip crypto you make fun of would have nearly kept up with you, with 0 stress and about 5 minutes of work a year. This is the opportunity cost bomb. You think you're being aggressive to times beat times the market. The cold, hard math of probability shows that this strategy, on average, underperforms times simply holding the market's safest crypto asset. You're not a wolf. You're a hamster on a wheel, running twice as fast to go half as far as the guy who just bought an index fund of crypto and went to live his life. And this financial vortex creates a parallel crisis. One that doesn't show up on your portfolio tracker, but shows up in your shaking hands, your ruined relationships, and your complete lack of sleep. You think the stress is just part of the game. You wear it like a badge of honor. The grind. Here's a newsflash for you. Chronic, high-stakes stress isn't a badge. It's a performance-depleting asset drain, as real as any trading fee. It's where your actual ROI goes to die. Let's talk about the chronic stress tax. You're checking charts every 90 minutes. You're up at 2 a.m. watching a candle. You think this makes you dedicated? From a biological standpoint, it makes you impaired. Studies on chronic stress show it forces your brain to default to short-term, amygdala-driven fight-or-flight decisions. You know, the part of your brain that tells you to run from a bear. It's terrible at long-term financial planning. You are chemically shutting down the very cognitive machinery you need to make good decisions. And sleep. Oh, the sleep. Or lack thereof. You believe in the sleep deprivation alpha, that if you just stay up longer, you'll find the edge. You're an idiot. Sleep deprivation can reduce cognitive performance by up to 30%. That's the equivalent of having a 0.08% blood alcohol content. You are literally, measurably trading drunk. You wouldn't drive a car like that, but you'll risk your life savings. Makes perfect sense. This spills over into everything. I missed my kid's recital because of a sure thing setup. I was scrolling charts in a work meeting and got called out. You're burning social and professional capital, the kind that actually leads to promotions and raises and more money to invest just to stare at a line go up and down. You're not just losing money on bad trades. You're torpedoing your primary source of income, your relationships, and your health to maybe, possibly, gain a single-digit percentage edge over the guy who just buys Bitcoin and goes to sleep. Brilliant strategy. Really top-notch work. So, we've established the chase is a trap. The fees are a silent killer. The opportunity cost is a ghost haunting your balance sheet. And the stress is turning you into a worse decision maker, creating a beautiful, self-reinforcing doom loop. You lose money, which stresses you out, which makes you make worse trades, which loses you more money. It's a closed system of stupidity. So if all this is true, and it is, because math, what's the actual path? It's hiding in plain sight. It's so boring you've probably dismissed it 1,000 times. Let's talk about the power of boring. how slow wealth is actually fast wealth when you account for the preservation of capital, sanity, and your ability to function as a human being. For 95% of you, systematic, boring investment in crypto blue chips, coupled with a life lived fully outside of charts, compounds wealth times faster. Not just in percentage terms, but in real, life-changing dollar terms. Because you don't blow up your account, you don't burn out, and you can actually hold a job to put more money in. Let's make this brutally concrete with two Jakes. Both are 28, both have $5,000 in 2021. Jake the Chaser drops his $5,000 on a can-lose DeFi gem. It 3X's. He's a genius. He doesn't sell. It crashes 98%. He chases the loss, trading frantically for 2 years, spending 20 hours a week researching, stressing, missing family events. By 2026, after fees and a few small wins, his portfolio is at $6,200. He's burned out, cynical, and his partner is one argument away from leaving. Jake the Board takes that same $5,000 and puts 60% in Bitcoin, 40% in Ethereum. He sets a quarterly calendar reminder to look at it. He uses his free time and clear head to get a certification. He gets a 20% raise. He adds the extra income to his crypto buys. By 2026, his crypto portfolio is worth $38,000. He's relaxed, has hobbies, got a promotion. He's the lucky one who just held. There was no luck. There was a strategy that didn't rely on hitting a lottery ticket. He invested in his own cognitive capital, and it paid a higher yield than any shitcoin ever could. Let's do the final math. DCA versus the hero shot. Jake A invests $300 a month into a 70/30 blend of BTC and ETH. Over 5 years, that's $18,000 invested. At a conservative 50% compound annual growth rate, his portfolio is worth about $68,000. Jake B saves that $300 a month for 4 years, $14,400, then goes all in on a 10x guaranteed play in year 5. What are his real odds? Let's be generous. A 15% chance of a 10x, a 35% chance of a 2x, a 50% chance of losing 70% or more. Now we calculate the expected value, the average outcome, if he did this 1,000 times. 15% of 144,000 is 21,600. 35% of 28,800 is 10,080. 50% of 4,320 is 2,160. Add it up. His times, expected value times, is $33,840. Jake A's time certain, boring, low-stress outcome of $68,000 absolutely crushes Jake B's risky, stressful expected times value of $34,000. The boring path wins by a factor of 2. And that's before we factor in that Jake B has a 50% chance of being left with almost nothing. Here's what nobody on crypto Twitter will tell you. Their business model depends on you never doing this math. The influencers, the projects, the exchanges, they profit from your activity, your hope, your clicks, your trades, your fees. Building wealth slowly and boringly is bad for their business. You are the product. Your anxiety is the fuel. So here's your mic drop moment. The true cost of chasing 10x isn't a number on a screen. It's the compound cost of guaranteed fees, the ghost of forfeited blue chip gains, and the systematic destruction of your mental and emotional capital, the very tools you need to build wealth in any area of life. You've been sold a lottery ticket to a burnout. The real get-rich-quick scheme was the get-rich-slow scheme all along. I'm not telling you to sell. I'm giving you permission to time stop watching, to calculate the fee burn from your last year of trades and compare it to a simple buy and hold portfolio, to look at the hours spent, the sleep lost, the relationship strained, and to make one decision. You can be the casino or you can be the patron. The patron always loses in the end. Step off the treadmill. The real wealth was the sanity and time you got back along the way. Now go to bed. It's almost 3 a.m.